You know how you have a house together and you just accumulate stuff over the years? Well, the same thing happens with your financial situation when you're married. Hey, MCE crew, I hope your day is progressing profitably. Today we're going to talk about divorce. Now, we're going to talk about divorce because marriage, you ever heard the term marriage contract? Marriage is a business contract in the eyes of the law, in the eyes of your state, okay? And to prove that to you, there are quite a few different tax advantages for married couples. Married couples can take advantage of several different tax advantages. And this is why, there was a lot of debate in the country about gay marriage. Well, the government, state aka government, cannot offer a set of benefits to one group and not offer those benefits to another group. So from the eyes of the state, they had no choice but to allow these business unions to be possible and recognizable under the eyes of the law. The law cannot discriminate. So, there were gay couples that went before different states and made the argument and said, hey, look, we're not allowed to take part in these financial benefits, and that is discriminatory. And they were right. So we're going to talk about divorce because sometimes relationships end, sometimes marriages end. And just like there are benefits to being married, there are complexities and detriments, financial detriments, to getting divorced. One partner can be stuck with alimony. Alimony is not cheap, especially if you have assets. And that's what we talk about on this channel. Especially if you've built a life together, okay, and one partner can prove that a lot of this money is, by virtue of my efforts as well. Then you have child support as well. These things can get very expensive and very complex. So we're going to go through a little bit of an article here from Kiplingers. I'll link to it. And we're going to discuss how untangling your finances in divorce is an important aspect of it, because you're splitting up. Now you're going from that union, and maybe when you came into that union, each partner didn't really have much. Okay, there was a lot of potential there, but there wasn't really a lot of tangible assets or assets at all. And then as the years went on, working together, that was built. So let's just go through this here and talk about it. Untangling your finances when you divorce. Don't forget these important details. Whose name is on the title to the house? Is the person paying child support covered by a life insurance policy? Have you changed your tax withholding now that you won't be filing as married? These are all important but often forgotten details. Divorce is an emotional time for everyone involved, but neglecting diligent follow-up can impact your finances. There are several areas that can easily be overlooked when you're constantly having disagreements, child custody battles, and alimony issues. Whether it is the husband or the wife who has been in charge of the finances, it is important for both spouses to get familiar with their planning. So a lot of times you have married couples and one may not even be plugged into what's going on with the finances. And so that partner may be at a disadvantage in the event that, they or the other partner wants to get divorced, so they mutually arrive at that decision together. So that partner needs to, worry about themselves, he or she. And of course, the other partner too has items that they need to take care of. Let's break up the task of untangling years of intermingled finances into 3 parts. Part 1, the law of division, your accounts. Get your home title and mortgage squared away. The largest asset to deal with in a divorce is usually the house. If the house needs to be sold, keep in mind there may be a large capital gain on the property, which needs to be accounted for, those capital gains taxes. Who is on the mortgage? Does one spouse need to come off the liability? This may be easier said than done, but most banks will require a new loan in the name of the party who gets the home. If the person granted the home in the divorce cannot qualify for a new loan, this can be problematic. Banks allow loan assumptions for several reasons, but the process is similar to getting new financing. Avoid removing your name from the title before liability is released. So let's say that one partner has not been out there in the world, business world, work world, making money. They might have trouble qualifying for the loan to keep the house. Or let's just say they don't make as much money, enough money rather to do that. So then they're going to have problems holding on to the house if that's the arrangement. If you are not granted the house or other real property, but your name is still on these assets, you're still subject to liability if something happens. For example, if a natural disaster damages your property or a leak damages a neighbor's property, you can potentially get sued from being listed on the title. An umbrella insurance policy is fairly low cost and can help in these circumstances. So God forbid you're getting divorced and you need to, untangle things. You need to call your property insurance company and see if an umbrella insurance policy is active, or if you need to get that, go ahead and do it so that you won't maintain or assume potential liability. You're also still liable for any maintenance fees or assessments that are not paid, along with property taxes, if your name remains on the title. If your former spouse fails to pay these fees on time, that can hurt your credit. So let's skip down here. I'm going to link to this so that you all can go through and read it. Hopefully none of you are in this situation, but life happens, And our goal here on Money Changes Everything is financial independence, come what may. So each spouse or former spouse still has to achieve financial independence, even though the union may have broken up. So part 2 of the law of division is examining your insurance. Do you now have more insurance than you need? Oftentimes, property and casualty policies may be issued in the name of one spouse. This is usually the case with homeowners insurance. If you receive property from a divorce, you should make sure the policy has your name on it in the event of a claim. It would also be prudent to inventory your personal property after the split, as you may be paying a higher premium when you now only need half the coverage. Okay, so property insurance, is going to be a concern. Car insurance even is going to be part of that. When it comes to life insurance policies, you got to check the beneficiaries to make sure they're in line with your desires. Okay, in many states have a law that says that the beneficiary of a life insurance policy has to be the spouse if you're married. And so a lot of policies out there have the spouse listed as the beneficiary. But if you're getting a divorce, you want to contact your insurance company, your insurance agent, your life insurance agent, and talk to them about that, because you may have a different choice now. Or you may feel as though, if there are kids involved and something happens to me, I still want those kids to be well taken care of. So maybe I keep this beneficiary the way it is, or change the percentage. You can also always change the percentage of your beneficiary. So say one person gets 50%, another person gets 50%. Okay, part 3 of the law of division, taxes and financial planning. Filing taxes as a single person can take a toll. Your tax filing status will be your status as of the end of the year. This may cause your taxes to increase or lead to an additional liability. If you're a W-2 employee and have been withholding for most of the year based on being married, you may end up under withholding. If you now have to file as single. Married people get more tax breaks. So you could unexpectedly end up forking more over to the government as someone who is divorced. It is possible that you have been making estimated payments for that year. If so, who gets the benefit? These are all questions that you're going to need to get with your CPA, your tax preparer, and talk through. You know how you have a house together and you just accumulate stuff over the years? Well, the same thing happens with your financial situation when you're married. That situation just evolves over time, and a lot of things you may not even be just consciously aware of. Okay, stuff that's in the background financially. All this stuff needs to be talked about and a plan needs to be developed to break that stuff apart once you move toward divorce. So not a really happy topic. I hate to see families break up like that. I believe that part of the problem in this world today is the fact that our family structures are not as tight as they used to be. It is what it is. But we look at things on this channel from a financial perspective, and we want you to be prepared for all eventualities. So divorce might be a financial speed bump, okay, that slows you down but doesn't stop you. All right, it's important to remember that. So I'm going to link to this, and you go take a look and go through it and understand it for yourself. If you're going through divorce, then get with your CPA, your tax preparer, your financial advisor, and of course, if you're going through divorce, you probably have an attorney, working with you as well. Okay, guys? So I will talk to you soon.